Good morning and welcome to Merrill's Monday Morning Market Madness. I've been doing a show every Monday now for a while, talking to you about the local real estate market and and I actually started the show long before coronavirus and all of that stuff. But I find that the content is more relative and important now than ever. I think that the big question in everyone's mind, and of course, I'm working from home, so there's going to be a meowing cat. There might be screaming kids. Might as well just get the cat in the video now. Say hi to everybody. This is Cleo. But anyway, now more than ever, people want to know, what's going to happen with home values. I've got buyers asking, is now a good time to, should I, buyers who need to buy are kind of concerned. Should I be buying right now or should I be holding off? Because is the market going to crash? People who already own homes worried about, what's going to happen with the equity in their home. People who have their home listed worried about whether the values are going to hold. And we really don't have enough data to know for sure on a lot of those things, but I'm hoping to bring you every single week updates on what we know so far, what the market is doing, what we're seeing so far. We'll continue to predict that and continue to look at the trends and help you figure out what we are seeing. So, ultimately, I always start every show looking at a metric called the month supply of inventory. And what it does is it looks at how many homes are currently on the market and how many homes have sold in the past 30 days. And if you divide that, right, it's sort of a saturation rate. How long would it take for everything that's currently available for sale to be gone, assuming that no new homes were able to come on the market? And we if this is your first time ever watching, we talk about a month supply of inventory 4 or lower is usually kind of considered a buyer's market. Home values are probably going to rise in that scenario because there's so few homes available for sale compared to the number of homes that are selling. And then typically a month supply of inventory that might be at a 5 or greater, or might start leaning towards a buyer's market. There's so much available. Buyers can be so picky and put in more aggressive offers, and you might see home values kind of fall in that scenario. Now, the month supply of inventory is not necessarily the greatest metric right now because it is a little misleading because we still have dramatically low inventory, but it's climbing fast. So let's just say the month supply of inventory, like any metric, like if you're analyzing a stock, right, you can't just use one ratio, right? No, not one ratio tells you everything you need to know, but it is a good barometer that I've always used to help me measure the temperature of the market, right? So right now in our MLS, we have 13,311 active listings. And if you've been watching the show for a while, you'll know that that is up. We were at one point as low as probably the end of February, we were as low as about 10,800 active listings. So we have seen an increase of about 2,500 more listings on the market now than we had just a couple of weeks ago. So in other words, right now, homes are being listed way faster than they are selling. Right. We still have 10,971 pending listings. Now, yes, that is a little bit lower. At one point, we were at 12,000 pending listings. So there's about 1,000 fewer listings pending right now than there were at the peak. But that's still a lot of pending listing. That's still a lot of homes under contract. I feel like you watch the news and it feels like the world is ending. Luckily, our Governor Ducey, has declared real estate as an essential service. And there's a lot of people still out there working. There's still a lot of people who have to buy. There's a lot of people who have to sell. People whose leases are up and people who have already sold their old home. So there's still a lot of homes going under contract, still a lot of people buying, that kind of thing. Now, in the past 30 days, we've had 7,685 listings close. So that gives us a month supply of inventory of 1.73. Which is dramatically a seller's market still. It would take less than 2 months if no new homes were to come on the market, less than 2 months for everything that's currently out there to sell. However, that number is climbing. We were as low as about a 1.3. We were as low as a 1.3 month supply of inventory. We're now up to 1.7 month supply of inventory. And with all the listings being added, that number is going to continue to climb. Right. But again, unless we get up into a month supply of inventory of 5 or 6, I personally believe that home values will hold relatively stable. In order to look at that, I decided to look at Gilbert. A couple of weeks ago, I did an episode on which city in the East Valley was the hottest market, right? So we looked at Chandler, Gilbert, Tempe, Ahwatukee, Queen Creek, Mesa. I looked at basically all those cities and which one had the lowest month supply of inventory, and it was Gilbert. That was a couple of weeks ago. Gilbert's month supply of inventory was below 1 month supply. And so I decided to take a look at Gilbert today and look at, okay, how many homes have sold in Gilbert, single family homes, by the way, only looking at single family homes. How many of them have closed in the past 30 days? And we've had 88 single family homes in Gilbert have closed in the past 30 days. The average price of those 88 homes was $404,544. Interestingly, this was a crazy stat. I couldn't believe it. One of the stats I like to look at is the sold to list price ratio. Meaning like, okay, if the home was asking $100,000 and it sold on average for $97,000, then you have a 97% sold to list price ratio. On average, buyers were getting it for 3% below what buyers are asking in that scenario. So interestingly, on average, the sold to list price ratio, the home sold for an average of $90 above the list price of those 88 homes that have sold in Gilbert in the past. So that gives you a sense for how hot the average is above the asking price. And the average price per foot is $182.06. So that's the last 7 days in Gilbert. Now, not totally fair to look at because the vast majority, and this is why I say it's a little early. It's a little early for us to know for sure what the market is, what the market is doing, because the vast majority of those homes that sold in Gilbert in the last 7 days, those 88 homes, were probably under contract before all this coronavirus stuff started getting really, really out of control. So I decided to compare the past 7 days to the last 7 days of February, the last full week in February. To me, and maybe I just wasn't paying close enough attention, but to me, it was, starting in March when, the toilet paper and everything kind of started to get out of control, if you know what I mean. And the spread, the panic, the everything. But February, we knew about coronavirus, but I didn't see a lot of people rushing off to buy toilet paper or panicking and putting their home searches on hold or that kind of thing. So the last week of February in Gilbert, we saw 139 homes close. So yes, we saw 50 fewer homes. I mean, we're talking about what is that? I didn't calculate the math, but 40%-ish drop in number of closings in Gilbert over the last 7 days compared to the last week of February. So just in a couple of weeks, we've seen a massive 40% drop in the number of homes selling. And interestingly, now I feel like this stat's a little misleading, and I'll explain it. The average price of those homes that sold in the last week of February was actually $438,000. So we've also seen a drop in average prices of those closings by a good $34,000. But here's the kicker on that one: the average price per foot of the homes that sold in that last week of February was $177. The average price per foot over the last 7 days is $182. Here's the reason why I think that is. So far, with inventory still being as low as it is, keep in mind that the homes that sold in the last 7 days actually sold an average of $90 above the asking price. So I don't think we're seeing a drop in values yet. The reason, and the average price per foot over the last 7 days was even higher. But what we are seeing is a definitely more significant slowdown in the higher end. So more expensive homes, $1 million homes, jumbo loans are getting very, very difficult to get. You've probably been seeing it in the news or hearing it around, or maybe not, but the lending community is tightening up their standards even, a little bit more. Minimum credit score requirements are being raised. Oftentimes when you're buying a home in with a jumbo loan, let's say you're trying to finance $1 million or more on a home, the lender needs to see a lot of assets. Well, if those assets have suddenly plummeted because the vast majority of those assets might be in the stock market, you might not have enough assets anymore to qualify for that loan. There's a whole other sleuth of issues with jumbo loans right now. So I think what we're seeing is fewer higher end homes closing, but the low end to mid range homes, the 400, the 300 to $500,000 range in Gilbert is still absolutely on fire. Yes, fewer sales are happening. Again, the higher end not selling as much. And, obviously a lot of buyers aren't wanting to go out right now and see homes, and only the people who are most serious and who need to act now are still the ones that are in the market. So lower volume, but I believe that we're going to see through this, and I'll continue to analyze it and I'll continue to keep you all posted. But I believe we're going to continue to see through this that the home values are going to hold pretty stable, just primarily because the inventory is so low. Just to give you an idea, 13,311 active listings. That sounds like a lot, but in the months of May and then again in June, we usually see in the Phoenix metro area around 10,000 homes sell in each month. So 10,000 homes would sell in May, 10,000 homes would sell in June. And that's, obviously in a normal market, which we're certainly not in a normal market. But if we were, 20,000 would be gone in May and June. I'm sure unless this coronavirus thing suddenly goes away really, really quickly, we're going to see less than that this year. But, there's a lot of sellers who can wait it out as well. And so it'd be interesting to see. I'm going to continue to try to bring you some data on it, and I'll continue to be as honest and transparent as I possibly can. But for now, I am holding to the hypothesis that home values in the Phoenix metro area are going to hold stable. I definitely don't think we're going to see any increasing in prices anytime soon, but I don't think we're going to see any big drops either, because there's still people who have to move. There's still homes that are selling. Inventory is still very low. So we'll continue to analyze that and keep you posted. Please let me know if you have any questions, and I hope you found this information helpful. Thanks.